The Nightly Business Report is brought to you locally by 3M, maker of Thinsulate brand thermal insulation for outerwear apparel. PR Newswire, helping businesses distribute their news for the past 40 years. And by Rollins Hudig Hall, provider of custom-designed risk management insurance brokerage services.
President Clinton is working on a Christmas gift for middle-class taxpayers. It's no secret he's talking about a tax cut proposal, and he's expected to unwrap it tonight. Good evening, I'm Cassie Seifert in New York.
And I'm Paul Kangas in Miami. Some analysts are suggesting that Santa has arrived on Wall Street. But there doesn't seem to be much Christmas cheer in the sports world, where labor troubles are making a big dent in profits.
NBR is made possible by digital, doing whatever it takes to make information work for people and not the other way around. Franklin and Templeton Worldwide formed the more than $115 billion Franklin Templeton Group, a global alliance of mutual funds and investment products distributed by investment professionals. A.G. Edwards, going beyond stocks and bonds to help you create the right plan for a more secure retirement. A.G. Edwards, an investor's resource for more than 100 years. And is produced in association with Reuters, which provides real-time and historical market data, news, and analytics over Quotron Advantage AE.
Family values may be going up. President Clinton is proposing middle-class tax cuts tonight that include a $500 per child tax credit. Republican Senator Phil Gramm also weighed in today with a tax cut plan. He's offering in excess of $2,500 per child. Both are planning to pay for their programs with cuts in spending, and that's the part Wall Street is watching closely. We have two reports, beginning with Rodney Ward in Washington.
The president's economic relief package for the middle class is expected to include a $35 billion package of tax credits for families with young children and incomes of less than $100,000, $20 billion in tax breaks for college, vocational education, and worker training, and new rules for individual retirement accounts. But the president will be playing catch-up with the Republicans and their contract with America, and with House Democratic leaders who've announced a plan of their own.
He can never catch up with the Republicans. That's the important thing. If he wants to cut X, the Republicans will always be wanting to cut X plus 1. Move to X plus 1, and the Republicans will cut X plus 2, because that is inherent, deep-down Republican philosophy.
The president is looking at reducing and consolidating cabinet department operations to pay for his 5-year, $55 billion tax cut and saving incentive program. Republican Senator and presidential hopeful Phil Gramm of Texas has a similar idea to pay for his plan to double the tax exemption for children.
And the president is not going to come in now and hijack this train, I can assure you. If he wants to be an engineer, great. But we're not going to let him pick which station we're going to.
Still, analysts say the president will be trying to protect the progress he's made in reducing the deficit.
His political role is going to be the watchdog on the deficit. He's going to be the one who will say, I'll veto anything that I think is fiscally irresponsible.
In a speech that's expected to last a little bit more than 10 minutes, President Clinton will try to show that he's not a hapless giant, that he will remain an important force in the political decisions that will be made over the next 2 years. Rodney Ward, NBR, Washington.
This is Suzanne Pratt on Wall Street. Much of Main Street may be anxiously awaiting President Clinton's speech, but few in the financial community are likely to be on the edge of their seats.
In a sense, what the president is doing is copying what the Republicans who have swept the House and the Senate were talking about in their campaign contract, in effect, a tax cut for the middle class.
Economists say a middle-class tax cut at this point in the economic cycle may be good politics, but it's bad economics. Stimulating the economy when it's at or near full employment could mean higher inflation.
History shows that when you do have tax cuts, they end up going into consumption, not into investment. If that's the case, it could upset the Federal Reserve and increase the chances for additional hikes in interest rates.
Some economists say that prospect could upset the bond market, but others say the market has been anticipating a cut since the Republican victory in November, and despite that, bond yields have still fallen.
The bond market simply has not yet focused on this to any significant degree on this bidding war for a tax cut, mainly because it's all in its very earliest stage. It's mainly politics. There's not even a way to determine how big the magnitude is.
But others on Wall Street say the real issue for the markets is President Clinton's credibility and his popularity. They say they will be listening as much to the tone of tonight's speech as the content.
This may be his most challenging speech because clearly the American public expressed dissatisfaction in the vote this fall. He will now want to try to seize the middle ground as his own.
No matter what the president says tonight or how he says it, the sense on Wall Street is it's really next year's problem. And market participants say they don't expect the real fireworks to start until the Republicans officially take over in January. Suzanne Pratt, NBR, New York.
Politics aside, it was the growing belief that yesterday's 31-point advance in the Dow Industrial Average might be the start of a significant year-end rally that allowed buyers to take the upper hand again early today, resulting in a broad upturn with market breadth 12-7 positive at 11 a.m., while the industrial average was up 12.5 points. All the talk about tax cuts appeared to help stocks extend their gains over the mid-session hours, and a firmer U.S. dollar was also a plus. At 2 p.m., the industrial average posted a 27.5-point gain. While market breadth improved 15-8 positive, the Dow Jones Industrial Average ran into some late selling linked to tomorrow's triple witching, which cut its closing gain to 19.18 points, putting it at 3765.47. So the Dow ended the day 10.5 points below its best level, but up almost 22 points from the low of the session. Trading volume, heavy, 334 million shares, although not quite as active as yesterday. Up volume exceeded down volume by a rather slim margin, not too impressive. The Dow Transport Index had an impressive day, though, up 18.39. Utilities down 1.12. And the closing ticket decidedly bullish, plus 624. Standard & Poor's 500 edged up 0.37, just a small fractional gain of 0.12 on the 100. Mid-cap 400 had a little better day, up 1.07. And in a statistical oddity, the Commodity Research Bureau Spot Index up 1.07 as well. New York Stock Exchange Composite rose 0.63, the value line up a little over 2.5 points, and a gain of nearly 17.25 points for the Wilshire 5000. After the market closed, the Federal Reserve reported in the week ending December 5th, the M2 money supply fell $1.5 billion. After the government reported a 0.4% rise in October business inventories this morning, a sign that businesses are stockpiling goods in anticipation of improving sales, well, the bond market edged lower today. The specter of tax cuts was also a negative because they would tend to make the economy stronger as well. And at the very time when the Federal Reserve is trying to cool things down through higher interest rates. This scenario added to the uncertainties then. So while tax-free and corporate issues closed unchanged, long-term governments ended with a loss of 4/32, bringing the yield to 7.88%. The Lehman Brothers long bond index fell 0.68, and Fed funds edged up a bit from yesterday to close at 5 11/16%. Later, I'll show you where the action was on Wall Street today. Cassie.
Orange County successfully sold off $483 million in securities from its troubled investment pool today. But analysts say the remaining $4.7 billion of investments will be more difficult to sell since they involve derivatives. A county official told Reuters today that the SEC has asked the Board of Supervisors for documents connected with the investment pool as part of its investigation into the portfolio's problems. And the financial crisis has triggered its first job losses. The Saddleback Unified School District said it would lay off 47 employees tomorrow.
Federal regulators reportedly believe Bankers Trust violated securities and commodities laws in its sale of risky derivatives to Gibson Greetings. The Washington Post today quoted unnamed federal officials as saying the SEC and the Commodity Futures Trading Commission could file civil suits against Bankers Trust within several weeks. The sources also say Bankers Trust is negotiating a consent decree that would allow it to pay fines to settle the lawsuits. Gibson Greetings says it's lost $23 million due to derivative investments bought from Bankers Trust. Meanwhile, Morgan Stanley said today it has ended merger talks with Britain's SG Warburg Group. The proposed $8 billion deal would have created the world's largest investment bank. A source close to the talks says the two companies could not agree on the terms for Warburg's Mercury Asset Management Group to participate in that merger. Nevertheless, some Wall Street analysts think the companies may be able to make a deal in the future.
Baseball owners meeting in Chicago have delayed for a week a decision to impose a new contract on players. Included in that contract is a salary cap that the players have vowed to fight. 4 months into the baseball strike, baseball seems no closer to resolving its labor troubles. And hockey is teetering on the brink of canceling its season. Meanwhile, as Darren Gersh reports, the financial damage to both sports is mounting.
Internal estimates given to the nightly business report show Major League Baseball expects licensing revenues for 1995 to plunge 49% from earlier projections. The business of baseball is now playing out what some call a nightmare scenario. Talks have collapsed again, and planning for the business of next season has become almost impossible.
The biggest what if for the business of baseball is this. What if the owners decide to put replacement players on the field? Will the fans still come and fill these empty seats?
Baltimore Orioles, Cliff, may I help you?
Teams are now getting an early indication. This is renewal time for season ticket holders. One baseball executive called their response so far scary. As for local advertisers, the Baltimore Orioles say they're still signing up.
But that's not to say that this, strike doesn't linger over every sale. It's the what-ifs that happen.
He shoots! He scores! Oh, baby! Oh!
The entire hockey season has become a what-if. Owners may cancel hockey this year if a deal isn't reached by the end of the month. Retailers who stocked up expecting hockey's booming growth to continue say sales of NHL licensed products are far short of projections. Next year could be even worse. Retailers are now placing orders for the fall of 1995. With the current season close to collapse, it's not an easy sell.
There's going to be some real concerns about retailers taking in hockey product for fall of 95 if they're not convinced that the players are going to come back and play.
If the season is saved, advertising executives say there is still time to salvage national television advertising, which kicks off in April. But local media, which get up to 25% of their money from sports, have already been hit hard.
They will not be able to what we call re-express or replace those money in alternative programming because they won't get the same amount of money.
Despite the turmoil in baseball and hockey, retailers say sales of NBA and NFL products are increasing at double-digit rates. Analysts take that as proof of just how strong the sports industry is. And they say baseball and hockey's labor troubles will have to get much worse before they do lasting damage to their businesses. Darren Gersh, NBR, Baltimore.
Still ahead, we'll get some insights into the discount brokerage business from the big brother of discounters, Charles Schwab.
Sprint surprised Wall Street today with a warning about lower fourth quarter earnings in its long-distance division. The news was clear to investors, and you could almost hear Sprint stock dropping. The company said earnings would be lower than the third quarter when it posted a record $165 million gain. Analysts had been expecting Sprint's long-distance business to carry revenues even higher in the fourth quarter. But Sprint said competition, especially from AT&T, was getting more and more fierce, Paul.
Well, Sprint stock dropped more than 12% today, and we'll see it. It was in the active list. We'll see it in just a moment. The Dow Jones Industrial Average, well, I think benefiting by the presence of Santa Claus again. I think a lot of people believe that the year-end rally is in progress, and we are up another 19.18 today. We're up nearly 30 points at one stage, you saw earlier. And the broader market doing well, about 15 to 8 positive. And 19 new highs for the year is against 100 lows. That's the best ratio we've seen there for a while. Hanson PLC, the big British firm, 12.3 million shares, topped the active list down an eighth. The stock goes ex-dividend tomorrow, 24.8%, so a little dividend capture play going on there. Sprint down 3 7/8, and you heard the news, and today, incidentally, Merrill Lynch downgraded it from above average to near-term neutral. Vodafone up 1/8, still the completion of a dividend play there. Compaq Computer was up 1 5/8. That company and Gateway 2000 have agreed on the terms of a broad patent cross-licensing contract. RJR Nabisco dropped 15/64. Southwest Airlines edging an eighth higher. Walmart no change. Same story with AT&T. GTE lost a half point, and National Health Laboratories down 3/8 after a 1.5 point gain yesterday, which arose after the company said it's going to merge its clinical laboratories with those of Hoffman LaRoche. Alcoa, one of the better gainers in the Dow, up 1 3/4, and Cabletron Systems did well, up 1 1/2. Third quarter earnings nicely higher, 59 cents up from 44 cents, and sales up 34% from last year. Hancock Securities issued a buy with a $60 per share target for Cabletron. Chrysler down 1/8 of a point. The FTC gave Kirk Kerkorian permission to increase his stake from 9% to 15% in Chrysler stock. Genentech up 2.5 points. Dan Dorfman in USA Today says Roche Holdings, which already owns 65%, just may acquire the rest of Genentech by the end of this year. International Paper was the best point size mover in the Dow Industrials, up 2 1/4, and WMX Technologies rising 7/8 of a point after Goldman Sachs added the stock to its recommended list. Air Lease Limited up another 2 1/4 points after rising 1 7/8 yesterday when the company increased its quarterly cash distribution to 47 cents from 46 cents in the third quarter. The stock is still yielding about 12%. Resource Mortgage Capital up 1 5/8. The company's president told us that he thinks the stock has bottomed out and may be coming back into favor after being out of favor. UniFirst up 1.5 points. A spokesman says the company officials have made some upbeat presentations, one yesterday particularly in New York City. Clear Channel Communications rising 4 points. The company says the stock has been depressed and it's making a comeback, helped along by positive comments recently by the A.G. Edwards brokerage and also Payne Weber and Alex Brown brokerages. Paragon Trade, the big loser of the day, down 3 7/8. The company sees fourth quarter earnings at 10 to 20 cents a share, and that's well below street estimates. And Coastcast Corporation dropped 2 full points on news that 3 of its board members resigned today. NASDAQ trading a gain of 5.01 on the index. Volume up a touch from yesterday at 343 million shares. Nearly 18 stocks up for about every 14 down. Intel topped the active list, down 1 3/4. That Pentium problem not going away. But 3Com, a big gainer, up 6 1/4. Second quarter earnings sharply higher, 55 cents versus 33 cents last year. And revenues up 48% of the period. Oppenheimer, Merrill Lynch, and Soundview Financial all increased earnings estimates. Cisco Systems up 1 11/16, benefiting by the strong performance of 3Com. MCI was down 5/8. Microsoft edged up a quarter. DSC Communications rose 2.5 points. Dell Computer down 1 1/4, maybe going to be hurt by that Pentium chip problem. Oracle System edged a small fraction higher. Nextel gained 7/8. And American Greetings was down 1 3/8, even though it reported nicely higher third quarter earnings, 79 cents versus 70, but some analysts tell me not quite up to street expectations. Merrick's, one of the big gainers, up 2 3/8 points. Second quarter earnings, 42 cents up from last year's 33 cents. Sales in the period up 35%. International Post down 2 7/8. This company provides video post-production services mainly in the New York City area, and its first quarter earnings were lower, 11 cents versus 15 cents last year. And Steck Vaughn Publishing down 1 1/4 points. The company says it sees a fourth quarter loss of anywhere from $100,000 to $400,000. Over the American Exchange, a gain of nearly 3 points in the market value index, but volume well down from yesterday at 16.8 million shares, about 3 stocks up for every 2 lower. U.S. Bioscience, trying to recover from a sharp drop earlier this week, was up 1/8 on 1.2 million shares. General Employment did well, up 1 1/4 points. The company's president recently has been quoted as saying he sees good growth for the company ahead because of the expanding economy. And Transonic B doing very well, up 2 3/8. We talked to a spokesman. The company had no news. And one final note, tomorrow's Market Monitor guest will be Jim Stack, the president and publisher of Investec. That's our Wall Street wrap-up. Cassie?
Although profits are down this year at many brokerage firms, one discount broker that continues to thrive is Charles Schwab & Company. One of the main factors behind the firm's success is its founder and chairman, Charles Schwab, who investors have come to know through Schwab's advertising campaigns. NPR's Jack Kahn recently spoke with him in Boca Raton, Florida.
Originally, one of your main selling points was that your commissions were far lower than the competition, the full-service firms. But now we have deep discount brokers that say that they can undercut Schwab by 30% or more. How do you respond to that kind of competition?
Well, in fact, our rates are substantially lower than the traditional brokerage firm today. And we do have, sprouting up, some competitors that have prices even lower than ours on some services. Not on all services. I mean, we have like a no-fee IRA, and we have some no-fee Schwab One accounts and dividend reinvestment for free. So not on everything, but we're very competitive in most areas.
No figures from the SIA show that the business at full-service brokers has fallen off a lot more than at discount brokers such as yours. To what do you attribute that kind of disparity?
Well, of course, what's happening here is our business is very dependent on individual investors, and that continues to grow in a wonderful way. More people are coming in to invest. Some of the traditional firms were very dependent on things like bond trading investment banking transactions, which are very huge, very profitable when they occur. 1994 was a very bad year, of course, for those, and therefore they were depressed. But they'll probably come back in years ahead.
An increasing share of your business is, of course, mutual fund related, such as the One Source program, which allows customers to choose from a broad range of no-load funds. Has this lived up to your expectations?
Absolutely. Mutual funds, I think, for the average person are the preferred place to be, particularly no-load funds. I am a great fan, advocate of no-load funds, and that's what we have in our One Source. That will continue to grow as more new people come into the marketplace. It has all the benefits you could possibly, diversification, professional management, and low fees. So I think it will continue to grow.
You've expressed some concern about investor confusion, and you've suggested the idea of a truth in labeling standard for brokers. How would that work?
Well, that would work. You'd go into a firm, and either they would have a little thing on their lapel indicating their years of experience or something to their relationship to the customer. And so many times people walk into various financial services company, have no idea what the person's experience is, what they're selling, what the commissions are, what the conflict of interest might be, and whatever products is being sold. So therefore, I think there should be more truth in labeling.
According to some observers, Schwab could be the third largest brokerage house 10 years from now. Is that realistic, and is that your goal?
Well, our goal has never been to set a certain number, but we're clearly on the right move. I think we're fitting right into the baby boomers are coming in, they're looking, searching for new ways to invest and looking for help. We want to be right in that major category.
Thank you, Charles Schwab, Chairman and CEO of Charles Schwab & Company.
Thank you, Jack.
Coming up, commentator Hobart Rowan balances the pros and cons of a balanced budget amendment.
The nation's commercial banks posted record earnings in the third quarter, and according to the FDIC, they're also likely to have a record year. Bank profits reached nearly $12 billion in the period, compared to $11.5 billion a year ago. And because there were fewer bad loans looming, banks had to set aside less money to cover their future losses.
Foreign computer chip manufacturers are breaking into the Japanese chip market in record numbers. Today, the Clinton administration said foreign chip makers held an unprecedented 23% share of the Japanese semiconductor market in the third quarter, compared with 22% the previous quarter. Trade Representative Mickey Cantor called the statistics a very positive trade development, but warned against backsliding.
Commentary, Hobart Rowan, economics columnist for the Washington Post, discusses why a balanced budget amendment may not do enough to reduce the budget deficit.
There's little doubt that one of the Republicans' early accomplishments will be passage of a constitutional amendment to require a balanced federal budget. There's also little doubt that the balanced budget amendment will remain an exercise in political hypocrisy. It delays the possibility of an urgent reduction in the deficit, the need for which was so graphically outlined by the Kerry Danforth Commission report to the President on the need for reform of the major entitlement programs. The balanced budget amendment is a gimmick that allows legislators to tell their constituents that they've done something to cut wasteful government spending when actually they've done nothing. They are free then to pursue business as usual. True, there's talk from the Clinton side as well as the Republicans about cutting back several government departments like HUD or Energy. But this would not cut the deficit. It would merely pay for a middle-class tax cut, which incidentally the country doesn't need. The Kerry Danforth report brings out the stunning fact that if no policy changes are made, the projected outlays for entitlements and interest on the debt will consume all tax revenues by the year 2012. Forget HUD and Energy. There wouldn't be enough left over for Congress, the White House, or an Army, Navy, and Air Force. And by 2030, tax revenues will be entirely gobbled up by entitlements. There wouldn't be enough left over to pay interest on the debt. The time to grapple with these problems is now. The constitutional amendment is a distraction that covers up the overwhelming dimensions of the problem. This is Hobart Rowan.
And that's this edition of NBR for Thursday, December 15th. I'm Cassie Seifert in New York. Thank you for joining us. Good night, Paul.
Good night, Cassie. I'm Paul Kangas in Miami, wishing all of you the best of goodbyes.
NBR is produced in association with Reuters, which provides real-time and historical market data, news, and analytics over Quotron Advantage AE. And is made possible by A.G. Edwards, going beyond stocks and bonds to help you create the right plan for a more secure retirement. A.G. Edwards, an investor's resource for more than 100 years. The Franklin Templeton Group is a global alliance of over 110 mutual funds and investment products, including tax-free income funds, domestic and international growth funds, and money market funds. Digital, doing whatever it takes to make information work for people, and not the other way around. And by the financial support of viewers like you. Transcripts of portions of the Nightly Business Report may be accessed on your computer through NBR Online, part of the America Online Interactive Service. NBR transcripts become available online 18 hours after completion of the broadcast.
The Nightly Business Report is brought to you locally by 3M, maker of Thinsulate brand thermal insulation for outerwear apparel. PR Newswire, helping businesses distribute their news for the past 40 years. And by Rollins Hudig Hall, provider of custom-designed risk management insurance brokerage services.
Tonight, look beyond today's headlines with Newsnight Minnesota. Cook the mafioso way with Burnt Wolf, and follow a legendary trail through Arabia in search of incense. Tonight on Channel 2.